G'day, I'm Sam Sari and here I am going to do a Bitcoin review and look at the big picture as well as the local picture and give my perspective as to where those key levels are, key opportunities and so on. Looking at the big picture right now, we can see that the 200 weekly moving average or simple moving average, this green line is the macro support line and it's just trending upwards. What we have, as you can see on my chart, we've got the Elliot wave count, and what we're looking for is the bottom of this wave 4. Wave 4 potentially was that. Wave 4 can potentially be lower down and hit this 200 moving average as well. And so we've got scenario 1 and then scenario 2. Two types of corrections. Now what we have here is the 21 monthly moving average as well, and you can see historically when we lose that there is a capitulation, accumulation and then moving up. If we look at it historically back there as well, as soon as we lost the 21 monthly moving average, we had the bear market, the beginnings of the bear market. So this 21 monthly moving average becomes important the moment we lose it, and the moment we gain it, we start the bull run. Again, we lose it, bear market, gain it, bull run. Similarly here, COVID scenario, as soon as we get the 21 monthly moving average, we have the bull run. Right now, we are very close to either, it's on the knife's edge, either we gain it or we lose it. So looking at this structure, it's possible that if we lose this level, and this 21 monthly unfortunately won't finish until the month is over, and if we were to lose that, I would say that therefore we have a correction, and the first part will be this level here, which is a bit of the, from a macro looking up, fib level, it's a 1.414. This level looks really good for the bottom, aligned with this 200 moving average potentially, or its 200 moving average could come down here, and therefore we have that potential entry point, which is from 22 to pretty much 25k. So that is the bearish scenario if we are to lose this significant level. If we were to lose that, we will potentially do what we did in 2021. 2017, which is this picture here. So using, you can see this 21 weekly moving, 21 weekly moving average acting as resistance, and if I was to add the 200 dailies, you can see the 200 daily acted as resistance here, acted as resistance there. Currently we're having resistance as well. So the 200 is acting as resistance. This grey one, the 21 weekly moving average, is also acting as resistance. So it's very much aligned to this. Until we break these two moving averages, I would not be bullish. And if we were to lose the 21 monthly moving average, I would then become bearish. So very close in terms of where we are in the big picture if we use historical data. Now, what we have here also, well, let's see where it is. We have a formation of some sort. I'm going to remove these for now. Just give me a sec. Don't see it on the chart. Oh, here we go. It just makes a lot of clutter. And if we were to just focus on this current area, that looks like a bear flag. So if we were to look at it from this perspective, we have a downtrend, outbounce, potentially a continuation pattern. Continuation pattern to the downside, and that will validate it once we lose this 21 monthly moving average, and then we look for potentially a move to the upside. And that could fit into that kind of scenario where this becomes a wedge. So that is very likely to play out. Really depends on the stock market. That's one scenario where I'm looking at this bottom level, which has low confidence historically as a buying area, strong from the macro perspective. It's a 1414. From a fib extension, it's 1. So this is going to be at least a strong bounce. So if that was to take place, and we'll look at it from that fib level, actually just do the other way around for a sec. You can see that the 618 is going to be very important, and this current level is aligned with the 0.5. So depending how it does it, if it does it this way, you can see it fitting in relatively easy to 0.5, and we can have either a breakout, or we go double bottom, or further down to this level, and this wedge becomes invalidated if we're to drop down, and what we can have is a channel instead. So we can then use this, and that will fit into the bearish scenario. If we were to lose that, then we can come down and look at this channel, and that I will be looking at that if that was the case, and this channel will be invalidated. Actually, this might be just a bit misaligned. Depending how it goes, we could potentially do that as well. So it's not going to be easy to work this out, but I do expect a good bounce, and then I do expect a bit of a resistance there, and this will fall into the 2017 scenario in a way, and that would be potentially where we grind and then just drop, not to that scale, but that's it. It is definitely a difficult scenario to play out, but we have our lines. We've lost one. We're currently looking at this level, and if you were to look at this picture from an inverted chart perspective, let's have a look at that just for a quick one. Let's just get rid of all this because it does make things a bit confusing. So if we look at this chart, you can also look at this as and I'm bullish from a macro perspective. What I do see is that that's wave 3. Wave 4 is where we trying to get concluded, and this, in my opinion, on the big picture, you got the big move, you got some consolidation type of thing, and a continuation pattern of some sort. This continuation pattern could be don't forget, if you remember wedges, or there's any wedges, they are macro bullish, and if you look at there's a few other formations pretty much are bullish formations, so you can look at this as well. It doesn't have to be perfect. You can have that as well. It is a continuation pattern of some sort that we're looking for. This currently fits in the Wyckoff continuation formation, where it's parallel channel, and we get the last dip, which is the spring area. So that can play in as well. It is very difficult to figure out which way it is, but we need our indicators to help us out. So if we were to add the weekly indicators for that, then that will help us find a reversal. So if we were to add the RSI, just simple tools, we can use the RSI potentially to find that breakout. So this is the weekly. What we have so far is potentially a wedge that's playing out, and yep, it could go all the way down here before we go up, or we can just go up And if we break this line, I would say go bullish. And depending on what moving averages are taken or what fib levels taken, we can see that the RSI is also going to be helpful to go bullish on the weekly. On the daily perspective, let's just look at that for a sec. Get rid of these buggers. On the daily, it's not as easy, as you can see, because of this formation that we're in. However, now that we've broken this 50% level, we're in a downtrend based on the RSI. If we break that downtrend, we're somewhere in the middle. We want to see a capitulation of some sort like that. We've already had one, but it's not. It might have just another dip, but with a bullish divergence or hidden bullish divergence. At the moment, what we have is this flat level, really. And so this could be a bounce, and we're expecting a bounce, but if we're to lose that, we can expect to go a bit lower and then go back up. So again, this fits in the model, but don't forget this type of scenario has played out before, where it just keeps dropping. But you can see here, for instance, this was an easy one. We had price coming down and we had a hidden bullish or just a bullish divergence. That was easy. Here we don't have any. There is no bullish divergence. There's nothing there to give us help on the daily. And one more component, what I was going to say is, if we look at this chart inverted, you can see that currently, if we look at this chart, you can see that this is a bottoming formation in a way, and if we were to break this level, as you can see, this horizontal level, then we are going to visit this level here. And it looks very likely that this is going to happen. And that's the minimum area for a good entry. And then maybe, depending on if we get a resistance either here or there, then we're going to consider what to do. And the thing is, this area is definitely going to be a profit-taking area, 42k. And if we stretch this line out, it makes sense that this area is a shorting position. So you can look at it from many perspectives. What do I have? I have another one or two scenarios. Let's have a look at those that I didn't place in order. So what we have here is, we've done that, a channel or a wedge. I'm not going to go into details. And we have this one here as well, the bullish version. So what we have is, if the price comes down to this line, we can get rid of that for a sec. Based on these lines, we can have a good entry there and potentially a reversal. But you can see where we go bullish is once we pass this line here. Actually, sorry, this one here. This line, this trend line was the bar. So let's look at this. Where this line is level of significance, it's confluence, acting resistance. So if we were to break above this, it could act like support, and then we go up. So that will be the minimum level. So what do I have there? It's 42k again. So 42k, if we were to break 42k, we have a good shot at going up. And then 44k, 45k is another level of resistance based on this trend line. So for the conservative ones, for confirmation, just wait until we break this level. And yeah, so that's the bullish scenario where we have this squeeze. But don't forget, we can also go down like that. Really depends on the stock market. This is another scenario that you need to factor in, and I'll wrap it up on that. Please give me a like and a follow, and even the show on the internet. And I'll talk to you soon. Cheers.